This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Triple play, the Dow, NASDAQ, and S&P 500 all set records again. And now with earnings season about to get underway, will corporate America's report card help stocks even more?
Talking trade with the world's largest free trade agreement hanging in the balance, Canada's prime minister comes to Washington as tensions run high.
And empty cup. The U.S. men's soccer team fails to qualify for next year's World Cup. Why that could have a big financial impact far beyond the soccer pitch. All that and more tonight on Nightly Business Report for Wednesday, October 11th.
Good evening and welcome, everybody. Well, it was a hat trick of records for the major market indexes on Wall Street today, and we'll get to that in more detail in a moment. But first, we begin in Washington, where the latest round of talks to renegotiate the North American Free Trade Agreement, or NAFTA, got underway. The talks are expected to be tough between the U.S., Canada, and Mexico. Today, Canadian Prime Minister Justin Trudeau brought his case directly to the Oval Office. Kayla Tausche has more.
In a meeting with the Canadian Prime Minister, President Trump said tough negotiations are ahead for the trade agreement between the U.S., Canada, and Mexico.
I've been opposed to NAFTA for a long time in terms of the fairness of NAFTA. I said we'll renegotiate. And I think Justin understands this. If we can't make a deal, it'll be terminated, and that'll be fun. They're going to do well, we're going to do well, but maybe that won't be necessary.
Trade negotiators got to work at a hotel 5 miles away in Virginia. Labor groups posted protest signs outside those talks as business groups worried requirements for a higher share of U.S. parts in autos might kill the deal. Ahead of the meeting with the president, Prime Minister Justin Trudeau and Foreign Minister Chrystia Freeland met with the Ways and Means Committee, which oversees trade agreements.
How'd it go, sir?
In prepared remarks, Trudeau touted the volume of U.S. trade with Canada and thanked the group for inviting him. But committee aides say Canada requested it. Regardless, the fact of the meeting underscores an uneasy alliance, with U.S. lawmakers and NAFTA trading partners increasingly worried the White House is proposing purposely unpopular demands in this week's NAFTA negotiations in order to justify potentially pulling out.
This round of NAFTA negotiations was extended 2 days, now set to close on Tuesday. The extension is meant to give negotiators more time to hash out more than 24 topics. President Trump says the outcome of a deal will be known in the not-too-distant future. For Nightly Business Report, I'm Kayla Tausche in Washington.
So let's turn now to Jonathan Lieber for more on those NAFTA talks. He is the head of the Eurasia Group's United States practice. John, welcome. Nice to have you here.
Thank you. Good to be here.
Given what we've heard today from the president and also from Prime Minister Trudeau, how likely do you think that the NAFTA negotiations will be successful as they exist now?
I think the probability of a successful renegotiation of this deal is declining right now. You have a very real deadline in sometime early next year because the Mexican presidential season is going to start heating up. And you've got the United States, who's backing away from their initially fairly reasonable set of demands to a much more difficult set of asks of the Mexican and Canadian government, and it's putting a lot more pressure on these talks.
So what do we end up with, John? Do we end up with a terminated NAFTA and bilateral trade agreements with the U.S. and Mexico and the U.S. and Canada, or what?
So I think what's much more likely is the U.S. very well could trigger the withdrawal provision of NAFTA, but never actually go through with a withdrawal process. The U.S. has never withdrawn from a trade agreement before. Congress would be very unlikely to support that. And in that case, you kind of have NAFTA hanging out there in limbo throughout the Mexican presidential election next year. Potentially, you've got a new government in Mexico. Potentially, the Republicans lose the House of Representatives in the midterm elections. And we come back in 2019 with NAFTA in limbo and negotiations starting all over again.
If indeed they do manage to strike a deal, there's talk that Mexico might not be included in the deal. It may be just the U.S. and Canada. But if indeed they do strike some sort of deal, what would be the advantages, as we know the negotiations are right now, to the United States?
So, NAFTA is a quarter of a century old. There's huge parts of the American economy in particular that didn't really exist back then. You can update NAFTA to include provisions on digital goods, for example. There's probably intellectual property protections that a lot of American businesses would welcome. A lot of the other stuff the Trump administration is pushing for is not really welcomed in Mexico, Canada, or amongst the U.S. business community. Maybe you'd see a tepid reception from it from the American labor community, but beyond that, there's not a lot of wins to be gained from the kind of more extreme demands by the Trump administration.
A lot of American businesses like NAFTA. It helps them do business economically, the Chamber of Commerce among them. Let me go back to your earlier point. If we activate those sort of withdrawal provisions, what's the point? But NAFTA doesn't really go away. What's the point there? The president gets to say, "Hey, I walked away from NAFTA," and what? What's the?
Yeah, I think the president's trying to increase leverage. And if we know anything from this president's deal history or any of his books that he's written, he wants to go into negotiations with the strongest possible hand that he can. And in this situation, the way that he can increase and maximize his leverage is by not just threatening to withdraw, which I think the Canadians and the Mexicans don't think is credible today, but he can actually pull the trigger on a withdrawal, which would be a much more serious situation that they would have to stand up and pay attention to at that point.
Which means we will be talking to you again, John. Thank you so much. John Lieber with the Eurasia Group.
Well, despite weak inflation, the minutes of the last Fed meeting show the central bank is on track to increase interest rates once again later this year. Steve Liesman has the lowdown on what policymakers are thinking now.
Fed officials thought in their September meeting that another rate hike is warranted this year, but had a serious debate about inflation and wages being too low and what that meant for that next rate hike. Minutes of the meeting show the key issue is the failure of inflation to hit the Fed's 2% target. Members of the rate-setting Federal Open Market Committee thought the recent softness of inflation was likely the result of unique factors like a decline in telecom prices. Under this line of thinking, inflation would gradually move up toward its target, clearing the way for a hike. But there was also substantial worry that more permanent factors like technology and globalization were behind the inflation miss. That concern has led a group of Fed officials to be less certain about raising rates again in December. The failure of wages to rise along with the decline in the unemployment rate is another major concern. Again, most expect them to rise gradually, but some are beginning to think maybe there's more to it. Maybe there's more slack in the economy, more slack in the labor market than previously thought. If so, it would cause them to rethink future hikes. So the bottom line is the Fed clearly indicated it's on track to hike again in December, and that's probably at the moment the even money bet. But if economic data over the next several months, including coming inflation reports, show that the low inflation fears are founded, there looks to be enough concern and enough doubt on the committee to delay that next rate hike. For Nightly Business Report, I'm Steve Liesman in Washington.
And those Fed minutes helped fuel a modest rise in stocks as investors applauded the central bank's sentiment that the economy is strong enough to perhaps withstand another interest rate hike. That led to record closes for all three of the major indexes. The Dow rose 42 points to 22,872. The Nasdaq added 16, and the S&P 500 tacked on 4. And another thing investors turned their attention to: earnings season. Bob Pisani has a look.
Earnings season is starting up again, and the key question now is, are we at peak earnings? Could earnings start to decline and maybe even go negative in the next quarter or so? That's what's got traders worried right now. Well, the short answer, relax, it's no. And that's what's propping the markets up. First, earnings are trending up. After treading water in 2016, earnings have bounced back in a healthy way in 2017. So the S&P 500, the earnings as a whole are expected to rise about 11% this year over last year, and up roughly another 11 or 12% in 2018. Second, look at the scope of the growth. Earnings have pretty much returned to double-digit growth. So we're up 15% in the first quarter, we're up 12% in the second quarter. Now, the third quarter is a bit of an exception. Analysts are only looking for about 5% gains, but that's because of major insurance losses from Hurricanes Harvey and Irma. But financials, particularly the insurance companies, should bounce back in the fourth quarter once all the dust settles. Now, the key to this story is the strong, steady growth in technology. It's been the big winner all year. We've been talking about semiconductors. Semiconductors alone are expected to jump almost 30% in their earnings in the third quarter. That's a huge number. Another big factor is the global growth trade. We call it the reflation trade. It's real. Earnings are improving in Europe, for example. The stock 600, it's like the S&P 500 for Europe. They're expected to grow 5.4% in the third quarter and 16% in the fourth quarter. That's important given how big these U.S. multinationals have become, very dependent on their earnings overseas. Finally, no assumptions have been factored in about tax cuts. Yes, traders are expecting some kind of tax cut to materialize, and there's some kind of premium in the market expecting that to happen, but it's not in the earnings numbers yet. And when that happens, we may see an additional boost. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Joining us now with her predictions for the third quarter is Karen Cavanaugh. She's senior market strategist at Voya Investment Management. Karen, nice to see you. Good to have you back. You know, it looks like corporate earnings overall are going to be pretty good. Why don't we start with that? What do you see as the overall, when we get through the whole thing, what do you see as the growth rate for the third quarter year over year?
Well, I think the party is going to keep on rolling. We may not see double-digit growth, but we're going to see high, mid-single-digit growth. So I think we'll probably end up around 7 or 8% growth for the quarter, for the third quarter earnings, and that's pretty darn good.
Is that because the comparisons are easy for some sectors, or is it because, you know, corporations are really firing on all cylinders, or maybe a combination of the two?
Well, I think a combination of the two. In the energy sector, yes, the comparisons are pretty low from the third quarter of 2016, so it makes it a little bit of a lower bar to jump over, and we've seen a nice increase in commodity prices, so that's really helping the energy sector. But sectors like the tech sector are really benefiting from that global growth story. We have a synchronized global growth expansion going on, and that's not something that we have all the time, so this is a really good backdrop for corporate earnings.
When you started 2017, you favored financials. You still favor financials. They are still your top pick, but you say that in this third quarter, they will be down 12%. Why?
Well, that's really the insurance companies that are going to be hit by a lot of the hurricane losses. But we definitely will see a bounce back in the fourth quarter. And even in some of the other subsectors of financials, like I think the banks are going to do well in the third quarter, and I think we're going to see some positive surprises. Also, financials the valuations are pretty compelling in the financial sector, so there's some good bargains there. They're valued lower than other sectors, so you can really jump in, investors can jump in there. And if we get any kind of tax cuts, we're going to see the economy move forward, and that's really going to help interest rates, and that's going to help financials even more.
All right. Well, from your lips to the earnings report's ears, Karen Cavanaugh, thank you very much.
Thank you.
Boy, I love it down there in Charleston. Karen Cavanaugh with Voya. Thanks again.
It is a beautiful part of the world. The number of job openings remain near a record high even after falling slightly in August. According to the Labor Department, there are a little bit more than 6 million openings. Job openings have risen as the number of unemployed have fallen to the lowest in a decade. The unemployment rate is currently standing at a 16-year low of 4.2%.
The president of the Dallas Fed says he wants to see more signs of inflation before raising interest rates again. The central bank has raised interest rates twice so far this year, but the yield on the benchmark 10-year Treasury has fallen, a reversal of what you usually see. Robert Kaplan calls that development ominous. He doesn't want the Fed to raise rates too fast and risk getting what's known as an inverted yield curve, because that tends to be a precursor of a recession.
The deadly wildfires burning in California have taken their toll already and now threaten one of the state's economic hubs. That's coming up. The head of the Food and Drug Administration said the country may start to see some drug shortages because of the damage that Hurricane Maria caused to Puerto Rico. 10% of drugs prescribed in the U.S. are made by manufacturing facilities on that island. Drug makers are working to get their facilities back online, but they're facing widespread power outages and supply issues.
Well, the images out of Northern California are nothing short of apocalyptic. Homes and businesses have been destroyed by the hundreds. Lives have been lost. Much of the damage caused by those deadly wildfires has been concentrated in Sonoma and Napa counties, the heart of wine country. Aditi Roy reports tonight from Napa, California.
Ray Signorello is seeing his winery for the first time since it burned to the ground. His father bought the property in 1977, and now the once elegant tasting room is a pile of rubble. Signorello is one of 5 wineries in Napa destroyed or heavily damaged by the more than dozen wildfires that have ravaged the state, hitting wine country the hardest. Signorello's winemaker was on the property at the time of the blaze and tried to save it.
So my crew had come up to try to fight the fire for a little while, but they didn't have near the equipment. I mean, I don't think you could have had the equipment to battle what they were trying to battle here.
But it was too late, and they had to flee. They are not alone. In neighboring Sonoma County, the owner of Paradise Ridge Winery, which was also leveled, says he will rebuild.
Our winery obviously is devastated, suffered complete loss of both the winemaking facility and also our tasting room and events center.
The economic impact of the wildfires to the tourism economy could be significant. According to the Wine Institute, California sold $34 billion worth of wine last year, and the state's wine industry generated $114 billion worth of economic impact in the U.S. In Napa, dozens of hotels, restaurants, and wineries that were not damaged remain closed due to power outages and road closures. They include iconic hotels like Meadowood and Silverado Resort and Spa, and wineries like Opus One, Joseph Phelps, Cakebread, and Behringer. Signorello says the silver lining for him is that the winery has already completed most of its harvest, which means they can focus on rebuilding.
This I can rebuild. This I will rebuild. And, take me a year or two. And I'm just trying to look at it in that positively, that it could have been a lot worse for us. And other people are going through some really tough times right now.
He also adds that he doesn't expect any long-term damage to his crops. Winemakers in this area, meantime, say what remains to be harvested are Cabernet Sauvignon grapes. They are thick-skinned and impervious to smoke. For Nightly Business Report, I'm Aditi Roy, Napa, California.
Profit falls less than expected at Delta, and that's where we begin tonight's market focus. The airline managed to report stronger than expected results despite canceling thousands of flights due to hurricane disruptions. Delta said some of the strength in the latest quarter came from overseas.
Currency is also having a benefit with the weaker dollar in terms of the desirability of the travel going over to Europe. But it's the first time in about 3 years where our international unit revenues outpaced our domestic unit revenues, so we feel good about that trend going forward.
The company also warned that higher fuel costs would hurt operating margins in the fourth quarter. Still, Delta managed to eke out almost 1% gain on the day, ending at 53.07. JetBlue said the recent hurricanes will cut into its profits and revenue in the third and the fourth quarters. For the third quarter, the airline said earnings per share will be reduced by as much as 7 cents and as much as 13 cents for the fourth quarter. JetBlue shares rose almost 1.5% to $20.53. Kroger said it is exploring strategic alternatives for its convenience store businesses, which may result in a sale of nearly 800 stores. The supermarket operator also reaffirmed its guidance for the year and said it plans to cut costs and make larger investments in e-commerce. The shares were up 1% to $20.78. And the luxury handbag maker Coach is changing its name to Tapestry. The company, which bought Kate Spade and shoemaker Stuart Weitzman, said the name change reflects that the company houses several brands. Coach will also change its stock ticker to TPR. Shares of Coach, or should I say Tapestry, finished the day down by nearly 3% to $38.87.
Well, after the bell, the networking company Juniper Networks cut its sales and earnings outlook for the current quarter. The company cited lower revenue in its cloud vertical. Shares initially fell following the news, ended the regular day down more than 1% at $26.86. And prepaid card company Black Hawk Network is also forecasting disappointing results ahead. After the bell, the company said increasing competition in the retail market would cause earnings and revenue for the year to miss estimates. In the latest quarter, the company beat profit expectations. Shares initially lower in the extended session. They finished the regular day down about 1% at $44.20.
It was a heartbreaker and perhaps the worst loss in the history of U.S. men's soccer. The American national team fell to the last place team from Trinidad and Tobago, failing to qualify for the World Cup for the first time since 1986. Now, you might think this is just a sports story, but it is a lot more than that. A number of companies had a lot riding on this event. Eric Chemi is following this story for us tonight. Good to see you, Eric, as always. It was a heartbreaker. I watched it, and I couldn't believe it. But the networks probably were looking at it. Television had a lot riding on this.
Fox in particular, they are spending $400 million for the next 2 World Cups, so call it $200 million per tournament. That's 4 times as much as ESPN spent per tournament in the previous one. So this is a big investment, and if you don't have the most popular team in America playing, it's one thing to get Mexico ratings or England ratings. It's not the same to get American
The U.S.
audiences.
really can drive that.
Yeah.
The sponsors have spent a lot of money backing the U.S. team. They want to reach the U.S. audience. Who's spending the most on sponsorships? How much are they going to feel this?
So it's a mix between U.S.-based sponsors and broader FIFA sponsors who sponsor the whole tournament. So some of these names like AT&T, Coke, Nike, McDonald's, Visa, Anheuser-Busch. So the big brands that we think about when we watch a Super Bowl or an Olympics, it's at that level of companies and, you know, similar amounts of money there. But again, if you've got other stars from other countries, hopefully people will still watch.
Right, because it's a global sport, and it's very popular all over the world. So one would think that there would be maybe other ripple effects, either positive or negative.
Yeah, the ripple effects can go a few ways, because if you think about soccer development in the U.S., what does that mean for Major League Soccer if you don't have the young people watching, or they're not interested in playing, or if they think America's not even good enough to make the World Cup, why would I try to make a career being a soccer player? I'll go basketball or football instead. So there's a lot of things there, and the ecosystem of all those companies that sell shoes and gear and getting kids to and parents to buy all that stuff. So big ecosystem.
I don't want to catch you flat-footed here. Where is the World Cup this next season?
It's going to be in Russia.
It's in Russia.
And so that brings its own complications of sponsors who didn't want to get involved because, as we know, Russia has a lot of issues with cheating in other sports, things like that.
And you also have time-shifting issues for the U.S. market and game
the ratings
times.
will already have trouble because of that time shifting.
Interesting story, a heartbreaking loss.
It really was.
For a lot of people.
They just had to have a tie.
Or not score a goal on themselves.
Oh, exactly.
Yeah.
Thank you, Eric, as always. Eric Chemi.
All right, coming up, Facebook's CEO takes the stage at a time when the company is under increased scrutiny. We'll tell you about that after this.
Personal computer shipments fell for the 12th straight quarter. According to Gartner research, weak back-to-school sales are partly to blame. Shipments of Apple's Mac were lower by about 5.5%. HP was the only major PC maker to see a gain.
Well, the massive Equifax hack reportedly compromised driver's license data for more than 10 million Americans. According to the Wall Street Journal, the license information was taken by those hackers who also took vital personal information like Social Security numbers. Information varies by state, but licenses typically do include a person's name, date of birth, home address, and personal details like your eye and hair color.
And finally tonight, Facebook and Instagram were down temporarily for some users today because of what the company said was a networking issue. But the timing could not have been worse. The company faces intense scrutiny from government officials over its role in spreading false news reports, and apologized for what people called a tone-deaf virtual reality trip to Puerto Rico. And today, CEO Mark Zuckerberg took the stage at a corporate event. Julie Borston has more.
Virtual reality hasn't been the out-of-this-world hit many had hoped, but Mark Zuckerberg took the stage at today's Oculus Connect conference to say that this is just the beginning.
We believe that one day, almost everyone is going to use virtual reality to improve how we work, how we play, and how we connect with each other. But we know that the most important technologies don't start off mainstream.
To drive adoption, Zuckerberg announcing a new $199 headset, the Oculus Go. It doesn't need a mobile phone or a PC, calling it the most accessible VR headset ever.
This could be a game changer, and I can see a lot of people are already really excited about it. But it is sort of a loss leader for Facebook because they're pouring a ton of money into VR, and they're not going to see a lot of return on it for quite a long time.
Today's announcements come after a rough year for VR. Oculus has slashed prices on its headsets. Nokia shut down its VR camera unit, citing the slow-growing market. An e-marketer says that VR growth is slowing and will not reach mass adoption in the foreseeable future. And just earlier this week, Zuckerberg was criticized for being tone deaf in his attempt to promote his headsets by demoing virtual reality technology in a visit to Puerto Rico, an attempt to show consumers the technology's value outside gaming. Zuckerberg apologized.
It is super hard to get people excited, consumers excited about virtual reality. So a lot of people are going to come into it through gaming, and then as the prices come down, as it gets simpler to use, they may start to expand into these other areas.
Zuckerberg showcased VR's range of uses, doctors prescribing VR for pain relief and using it to study the heart. Zuckerberg setting a goal of getting 1 billion people into VR. We'll have to see if the new, cheaper headsets tip the product to the mainstream. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And before we go, one more look. Why not at a record day on Wall Street? All three of the major indexes at record levels at the close. The Dow up 42 points at 22,872. NASDAQ up 16, and the S&P 500 tacked on 4.
That'll do it for us tonight. For NBR, I'm Sue Herrera. Thanks for joining us.
Thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you back here tomorrow.